All right. So last week, I introduced you guys to what economics is all about, right? And we defined that economics is the study of human behavior, where when we are talking about human behavior, we are talking about the choices that people have to make. And we say that people make choices because of two reasons. And the two reasons being there is unlimited wants, where I gave you an example and I said, I want a Ferrari, I want a Bugatti, I want, an Aston Martin and etc. And then also because of limited resources, where we say that resources are land, labor, capital, and entrepreneurial skills. So this mismatch between the wants and the resources result in choices that we have to make. And the choices that we make result in a cost to society known as an opportunity cost. And today we just want to, for the next maybe 20 or 30 minutes, we just want to have a look at the circular flow of income. And then after we are done with that, I'm going to send you guys a recording that I've done of some past exam questions for the units that we have covered so far, so that at least you can that for revision, right? So that I don't keep you too long. So we're just going to be 20 or 30 minutes, and then I'll send you guys this recording plus a recording with some past exam papers so that at least you can revise these units that we've done. All right. So the circular flow of income, that's what we want to look at. So for the guys that are doing advanced diploma in business management, this is your unit number 2. For the guys that are doing first year, this is your unit number 3. Can you please make sure that you make please ensure that your mics are muted. So the first thing that you need to know is in an economy which is operating. But just a little bit of a background. This topic actually falls under both micro and macroeconomics, just as a background, because it looks at individuals and then it looks also at the whole economy. Right? So it falls under both topics, microeconomics and macroeconomics. So in any economy where you are operating, there are what we call the key players of an economy, which means that if these people are not there, the economy will not function. So those are our key players. If these people are not there, that economy will not what? Will not function. So the first key player of an economy is a household. So in economics, when we use the word household, it means two things. It either means an individual, one person can be a household. So for example, if you are single, you stay alone, you are a household, you are one person. Or it means a family setup, right? If you are living as a family, you've got a father, you've got a mother, you've got some children there, that is also a household. So in economics, a household makes what we call uniform decisions. So for example, a household decides how much bread do they buy in a week. A household decides how much fuel do they use in a week. Which car do they buy for their household? So that's a household decision. So a household is a decision-making unit within an economy. Now, when we discuss a household, there is something that is peculiar about a household. The thing that is peculiar is a household is what we call the owner of the factors of production. Remember, we said that there are 4 factors of production: land, labor, entrepreneurial skills, and capital. So the households are the owners, or they are the suppliers of the 4 factors of production. Right? It is the households that own the labor. If you want labor as a company, like if you want people to work at your company, you have to approach the households. If you want capital at your company, you have to approach the households, because it is the households that own the capital within a nation. If you want land within a country or for your business setup, you have to also approach the households. I know that that statement is questionable, but I will come back to it. Right. You have to go to the households. If you want entrepreneurs, you have to go to the what? To the households. They are the people that own all of the factors of production. Now, what I've just said applies to what we call a market system. Remember, in our first unit, when we looked at the 3 economic questions, I said that there is a command system, there is a market system, and there is a mixed system. So households own all the factors of production within a market system. But if you go to a different type of a system, for example, maybe a command system or a mixed system, you might find that maybe the government might own some of the land within that country. But under a normal market system, the households own all of the factors of production. If you ever see a question asking about this, the assumption is you are operating under a market system unless stated otherwise. That's role player number 1. Right. So because they own the factors of production, they are the people that get rewarded for the factors of production. We're going to talk about it shortly, but I want you to get the gist of what I'm talking about. So if someone owns labor, right? So for example, James owns labor, right? He can work for you, right? He owns labor. So if he owns labor, you have to pay him a wage rate. So which means the reward for owning labor is a wage. Right? So we're going to talk about all of the factors of production later and their rewards, but I just want you to have that in your mind. Right? So the next thing that we're going to talk about is the business as a key role player. So a business or a company, or economics, we use the word firm, F-I-R-M, right? A business enterprise, a company or a firm, right, is the one that does the production. They don't own any land, they don't own any capital, they don't own any entrepreneurial skills, but they are the ones that do the production. So they consume. They go to the houses and say, can I have land? Can I have labor? Can I have entrepreneurial skills? And then they combine all of these things, and then they produce the goods and services within the economy. So businesses consume factors of production. They use up the land, they use up the labor, they use up the capital that is in an economy in order for them to produce goods and services. And businesses do this in order for them to make a profit. Their goal is to make profit. Right. Now I want to go back to the households. So after a company has produced goods and services, who consumes these goods and services? It becomes the household. So the household supplies the factors of production. It supplies land, labor, and capital to the businesses. The businesses produce products, right? After they've produced products, right? They what? They provide the households with the what? With the goods that need to be consumed. So it's a circle. We are going to see the diagrams later on, right? So those are our 2 role players. Then you have got the government, right? The government in any economy, they set up the framework for you to operate. They make sure that you have got the roads, the bridges. They make sure that you have got the laws, the police, the army, right? That is needed for there to be law and order within an economy, for businesses to operate and for individuals to have safety within the market structures that have been set up. So they provide the structure for business to operate, and they provide the safety net for a household to be served within an economy. Right? So that is what a government does. So in order for them to do that, they are going to provide law and order, which means that they create the laws of the economy. They are going to spend money, because for you to have roads, you need to spend money. For you to have bridges, you need to spend money. So they are going to have public expenditure. They are going to tax the citizens or the households, because for them to build the bridges, they need money also. So they are going to get that money from the household. So which means that they interact on a day-to-day basis with their households and also with the businesses. So remember, for them to be able to build a road, they need concrete. Where do they get the concrete from? They get it from the businesses. So they interact on a day-to-day basis with both the households and the businesses. Then lastly, you've got the foreign sector. The foreign sector is now countries that are outside of South Africa. You are now looking at Botswana, you're looking at Zimbabwe, you're looking at Mozambique, you're looking at Swaziland, all of these different countries that are outside of South Africa. They form what we call the foreign sector. And the foreign sector, it supplies labor, right? It also takes away labor from our economy. It supplies land, it also takes away land from our economy. It supplies capital, it also takes away capital from our economy. It supplies us with entrepreneurs, but it also takes entrepreneurs away from our economy, right? So that's what the foreign sector within an economy, right? So those are our 4 major role players that you see in an economy when it is operating, right? So I'm just still giving you the background. We're going to come to the diagrams shortly. I'm just giving you the background. So the second thing that you need to know is there are different types of markets within an economy, right? So there's what we call the resource market. Remember our 4 factors of production: land, labor, capital, and entrepreneurial skills. So within the resource market, this is where people sell their labor. This is where people sell the land. This is where people sell capital. This is where people sell their entrepreneurial skills, right? So that is the resource market. So now remember one thing. We said households are the owners of the factors of production, which means they are the ones that supply the factors of production within the resource market. They are the ones that supply the factors of production within the resource market. And then we say the businesses produce using factors of production, which means they are the ones that consume the factors of production within the resource market. This is a typical exam question. Almost every exam paper, this question will be there. You will notice it when I send you the video. If you go through the video, you will notice that it's there. This question, which is asking about what I'm talking about right now, right? So households supply the resource market. Companies consume from the resource market, right? But when households supply factors of production, they earn certain incomes or certain wages from what they've supplied. If they supply labor, they get a salary or they get wages. If they supply land, they get rentals in return. If they supply entrepreneurial skills, they are given a profit. If they supply capital, they are given interest for the capital that they have supplied. So those are the things that happen in the resource market. Then you've got the goods and services market. The goods and services market is the market where you now get your bed, your computers, your cars, and all of those sort of things. The normal market that you guys know about. So companies are the suppliers in the goods and services market, and the households are the consumers in the goods and services market. Now, our first diagram, right? So our assumption is that there is no other country in the world other than South Africa, right? There is no other country in the world other than South Africa. And also, there is no government in South Africa. We're only having a market in South Africa with no other country, with no government. What happens within this market? How do things operate within this market? So it means we have 2 things. We've got the companies and the households on one side, right? So remember what we said, households, I'm looking at the red line, right? Okay, let me get my pen so that I can just annotate and you can see what I'm talking about. So households, what do? They supply factors of production to the what? To the factor market. And remember what we said, if they supply land, they want rentals. If they supply labor, they want wages and whatnot. But they supply factors of production to the factor, to the resource market, right, or to the factor market. Right? Once they do that, the companies use these factors of production in the production process, and they produce. What do they produce? They produce goods and services, and they supply these goods and services to the markets for goods and services. And once they do that, what happens to the goods and services? these are consumed by the households. So you can see that it's a complete circle. So that is why we call it the circular flow of income. It's a complete circle. We have factors of production that are flowing from the households to the firms through the factor market. And then we have got goods and services that are flowing from the firms to the households through the goods and services market, right? So that is one complete circle. Then in the opposite direction of our circular flow, right, we notice that there is a movement of spending and income. There is a movement of spending and income, right? Households spend money in the market for goods and services, and this money goes to the companies, right? Households spend money in the goods and services market, and this goes to the what? To the firms. And the firms, when they receive this money, what do? They use this money to pay for wages, rentals, interest, and profits back again to the households in the opposite direction. So exam question will say, in the circular flow of income, goods and services and factors of production flow in the opposite direction of spending and income, and that is correct. So that is true. So that's an exam question that you can get on this diagram, right? Okay. So let's make it a little bit more complicated. So remember, I said we assumed that there is no government. What happens if we introduce the government? What happens if we introduce all right, sorry guys, I just thought of another exam question that I've seen on this diagram, this first diagram. I just want to explain it so that it helps you guys. So a business does not receive profit. Please take note. This is not profit. This money over here, it's not profit. It's called revenue. If you see an exam question, this is revenue. The only person that receives profit is the household. So a business receives revenue, and from that revenue, they pay wages for labor, rentals for land, interest for capital, and profit for entrepreneurial skills. Just take note of that. It's just something that I remember from one of the past exam questions. All right, let's go ahead. So let's introduce the government, right? So now that we have a government here, how does that affect our circular flow of income? So we still have got our markets. Our households are still going to go and purchase goods and services in the what? In the goods and services market, right? Our households are still going to supply factors of production in the what? In the factor market. And for all the factors of production that they are providing to the firms, they are going to earn their wages, they're going to earn their interest, they're going to earn their profits, they're going to earn their rentals, right? And the companies, the firms, for all the goods and services that they're giving to households, they're going to get their revenue, right? So nothing changes in that part. But now, because there is a government, the income that the household was getting. So, for example, if you were getting a salary of 1,000 rand, if the government is introduced in the country, the government will tax you. Let's assume they tax you 10%. So it means that you can only spend 900. So that is what is called a leakage. We're going to talk about leakages a little later on. That is what is called a leakage. You can only spend 900 because the government is taxing you 10%. What happens to the 100 rand, the 10%? It goes to the government. So the introduction of the government will lead to leakages from the circular flow of income in the form of taxation. But the same government that is taxing the economy is also going to take some money and put it back into the economy. Remember the grants that we have, right? The grants for the children, the grants for unemployment, and all of those different types of grants for the elderly, all of those different types of grants that are there. These are now called injections into the economy through social transfers. So that money might come from taxation, that money might come from the World Bank, that money might come from donors, wherever it's coming from doesn't matter. But we are saying that it's an injection in the economy. So there is a net effect of the government's involvement in the economy when it deals with households. The same also applies when it deals with companies. So it also taxes companies, which means it withdraws money from the economy, but it also purchases, because remember, a government is going to need chairs, it's going to need computers, it's going to need buildings. So a government will also inject money into the economy through public expenditure, right? That it is going to do, right? So that's introduction of the government within our circular flow of income. Let's further complicate it, right? Let's introduce the rest of the world, the export market, right? Let's introduce other countries into our circular flow of income. So again, the relationship between households and firms doesn't change, it's still there. We still have got our market for goods and services. We still have got our factor market. And the households and the firms are still interacting between those two markets. We still have got our government, which is still spending money in the factor market, in the goods and services market, but it is also still affecting our households and affecting our firms through taxation that it is implementing within that specific economy, right? But we now have got the rest of the world. We now have got an foreign sector. So how does the foreign sector affect our economy, right? So I want you to think about it this way. Remember, if we are manufacturing certain products in South Africa, these products can be exported to another country, right? So when they're exported to another country, what happens? These other countries are going to pay us money, right? So which means through exports, we are injecting more income into the South African economy. So exports become injections of income into our economy. But also as a country, we need medical technology. We need medicine from the US and all of those countries that manufacture medicine, which means we are also going to spend our hard-earned South African rands buying products from Temu, from Amazon, from all these pharmaceutical companies that are outside of the country. And that is a withdrawal, that is money moving out of the country into the rest of the world. That same rest of the world is also going to supply us with labor. That same rest of the world is also going to supply us with capital that we do not have as a nation. So it also interacts with the factor market. All right. Then lastly, I've also introduced here the financial market, how it affects this circular model of income. So the financial market, it usually affects the whole model through savings and investments. So let's talk about leakages now. All right. So this is the diagram that is in your textbook that covers everything that we've talked about. Right. Oh, these notes don't. Oh, okay. Yeah, my notes are missing something here. All right, I'll explain. It's fine. My notes are missing something. I think I opened the wrong notes, but it's okay. I'll explain. So I want to talk about leakages and withdrawals. It was the typical exam question. I want to talk about leakages and withdrawals. What are leakages and what are withdrawals? But I think you already have an idea, right? So when we say something is a leakage, we are saying it's taking money outside of the circular flow of income. So leakages usually, they're in the form of taxes which the government is implementing. Taxes from the government. And then when we're dealing with the households, there are also what we call savings. Savings, it means someone, instead of spending the money, they decided to keep it in the bank account. They decided to save the money. So leakages can come in the form of taxation. Leakages can come in the form of savings. Leakages can come in the form of imports. So those are the three leakages. If you get a question which saying which one of the three are leakages, So those three are leakages: taxation, savings, and imports. Those are leakages. Right? Then injections into the economy. Right? Injections, we're saying something that is bringing money within the economy. So injections are in the form of grants or what we call transfer payments from the government. So that's injection, right? And then we also have got investments that are being done from usually, the banks invest money into the economy through investment vehicles and all of those sort of things. They get money from the World Bank or get money from another bank outside of the country, and it gets into the economy as private investment or foreign direct investment. So those also are considered injections, investments. Then lastly, exports are also considered injection, because when we export a product outside of the country, we are paid in foreign currency. So that's also considered an injection within the economy. So that brings us to end. Like I said, this is a very short topic. It's not a long topic. This is a very short topic that I just wanted us to close on for today. So that brings us to the end of our topic on secular flow of income. I'll come back to my WhatsApp and I'll answer you guys. So number one, next week, we are meeting to look at theory of demand and supply, right? That is on Sunday next week. So tomorrow we don't have a lesson, right? We've covered what we need to cover today. So next week on Sunday, we are meeting to do theory of demand and supply. Then for the guys that are doing advanced diploma in business management, we are meeting on Saturday evening to do your microeconomics assignment. Just take note of that. We are meeting on Saturday evening next week to do your microeconomics assignment. And remember what I said, from next week onwards, I'm only dealing with the students that were interested in the classes and that have made their deposit. For those of you that have not made any deposits, if you're still interested in the classes, please reach out to me so that we can talk, and I can add you to my private group where we will be doing the tutorials. So remember, the tutorials cover these lessons that we are doing. They cover the assignments. They also cover exam preparation, where we go through past exam papers together. So in addition to this video that I've done today, I'm going to send you an example of a revision class that I've done with students, where we were revising Unit 1 and Unit 2, these topics that we've covered so far, so that you can see how we do the exam revision, and also you can see the type of questions that you get from these units. So I like doing it this way, so that at least you always are aware of the questions that can be asked, while at least your brain still is fresh on the topic that we've done. So I'll send this video recording, and I'll also send a recording of the questions that can be asked on topic 1 and topic 2 that we have covered so far. Now, let me just check the chats to see if there are any questions that need to be answered. Someone says, what is an investment vehicle? All right, an investment vehicle is not really for the purposes of this, but an investment vehicle is whereby, let's say that as an organization or as a government, you want to make a specific investment in a specific sector. So you create an organization, or you create a fund, or you create a structure through which you can make that specific investment, right? So for example, if you look at countries such as, I think it's the United Arab Emirates, they've got what they call a sovereign fund. That sovereign fund can act as an investment vehicle for them. So which means they put money into the sovereign fund, and that sovereign fund will then go and invest in various things that they want to invest in. Then someone says, please share the slides. Yes, the slides will be shared, but I only share my slides usually to the private groups. But for you guys that are not yet in my private groups, I'll only share the portion that we did today. I will not share all of my slides. I'll only share the portion that we did today. Someone says, leakage is money not being used. In a sense, you can say that leakage is money not being used, right, within the economy. So you have earned, remember it's a so there's something that I didn't talk about. Usually we talk about it in your second semester. So when we're looking at the secular flow of income, we say that the income flow is always equal to the spending flow. What does that mean? When I say the income flow is always equal to the spending flow, I'm saying that if you earn an income of 1,000 rand, you are going to spend all of that 1,000 rand, right? So which means that the money that you earned 1,000 is going to come back to the company when you spend it, the company. So then a leakage becomes when they don't get 1,000. You were paid 1,000 salary, but that 1,000 was not spent on goods and services. You only spent 700. So where is the remaining 300 that you did not spend? And that becomes a leakage. If that 300 was tax, it means tax is a leakage. If that 300 was a saving that you did, it means saving was a leakage. If that 300 was an import that you made as an individual, which means you send the money to another country, that becomes a leakage. So I hope that explains that to my friend there. Let's see, is there another question? Okay, I see there's no other questions in the chat. Is there any other questions, guys, before we dismiss? Like I said, today I didn't want to keep you long. I just wanted to finish this topic. Another question? Wonderful. If there are no questions, see you guys next week. All right. So for those of you that will not be joining us, we also assist with other things. So if you ever need assistance, feel free to give us a call, and then we'll see how we can assist each other out. All right. Good night.
Bye.
Hello.
Bye. Bye. Thank you.
Okay. Bye-bye.
Right,